From Qtr4. It's a pleasure for us to host this call. We have with us senior management of Tata Steel. I now hand over to Shamita from Tata Steel. Shamita, over to you.
Yeah, thanks, Abhishek. Good evening, ladies and gentlemen, and thank you for dialing on to this call today. On behalf of Tata Steel, I'm delighted to welcome you all to this call. I know it's been a very busy day for all of you with many results out today, and it is also very late, especially for those of you who are dialing in from the Far East. So thank you again. In today's call, we will discuss our results for the quarter just ended, March 31st, 2018. We will also be sharing details of our acquisition of Bhushan Steel so that you understand the rationale behind the deal as well as how the deal is structured. I'm sure you have a lot of questions and we will be happy to answer them in detail. To walk you through the call, we have with us Mr. Narendran, Managing Director and CEO Tata Steel, Mr. Kaushik Chatterjee, Executive Director and CFO Tata Steel, and several other senior colleagues. I will request them to make a few opening remarks before we open the floor to questions. Before I hand it over to them, I would like to say that our financial results, as well as the presentation which explains the results, is on our website, and I would refer you to the Safe Harbor clause on page 2 of the presentation, which will cover the entire discussion today. With this, I will hand you over to Naren. Thank you.
Thanks, Amita. Thanks for dialing in and welcome to this call. I'll start with the macroeconomic situation as well as what's happening in the steel industry globally. Globally, the economic growth is broad-based and has strengthened further over the last few months. The advanced economies are seeing a recovery in investments, while in developing and emerging economies, the growth is better than expectations. China, while it is witnessing a kind of slowdown, it is more or less in line with expectations. The capacity closures in China resulted in lower exports from China, which led to favorable global demand-supply balance in FY18. This resulted in improved capacity utilizations, better steel prices and spreads, and stronger performance by steel companies. The Indian steel demand and prices also improved, especially during Q4, underpinned by growth across the steel-using sectors and the government's continuous push on infrastructure spending. EU steel demand has improved, supported by growth across the main steel-using sectors. However, the Southeast Asian steel demand remains sluggish in Q4, and a continued weakness in construction sector accentuated by the holidays in the Chinese New Year. In terms of Tata Steel's performance, Indian operations continues to deliver market-leading growth on back of our leadership position in chosen segments and an unparalleled market reach and a strong brand. In FY18, our sales volume grew by 10.7% to 12.15 million tons versus a 7.9% growth in steel demand in the country. In fact, our volumes would have been higher, but for the fact that in the fourth quarter we were impacted by an unforeseen blast furnace outage at a Kalinganagar plant. I'm happy to confirm that the issue has since been resolved and the plant is now running at full capacity. The European performance improved post-planned maintenance and upgrades in the third quarter, and deliveries increased in the fourth quarter on a quarter-on-quarter basis. The Southeast Asian operations maintained volumes despite weaker markets. We continue to strive for a sustainable business model and undertake a number of initiatives to reduce the carbon footprint, and the specific water consumption at our Jamshedpur plant improved further and was very close to the global benchmark in FY18. We remain focused on consolidating our leadership position by pursuing both organic and inorganic growth. Our Kalinganagar plant expansion is progressing well. The engineering work is going on as per plan, and the construction work for the steel-making plant is also started. I'm also happy to share that the NCLT has given its approval on a resolution plan for Bhushan Steel, and we've also received the Competition Commission approval for this earlier. Bhushan Steel is an important acquisition for us. It's an important addition to the Tata Steel family. We have a capacity in Bhushan Steel of about 5.5 million tons, and it's currently operating in the range of 3.5 million tons. In addition, there are downstream facilities like the cold rolling mill and the galvanizing units, and the product mix is also attractive. The mother plant in Angul, Odisha is close to our existing facilities. It's about 150 kilometers away from the Kalinganagar plant, and it helps us in expanding our presence in Odisha, which is a strategic partner state for our growth. The downstream units are closer to markets and customers, which can leverage to strengthen our presence in key segments. The site also provides us an optionality to scale up in the future, which we believe has significant value given the time required to set up a greenfield plant in India. We are progressing well to form the joint venture in Europe, and we expect to sign the binding agreement very soon. Assuming 6 months for approval from the antitrust authorities, we are looking to close the transaction by the end of the year. We remain positive on Indian steel markets, and the Indian government's focus towards infrastructure spending and creating a level playing investment environment is very encouraging. In European steel demand too is expected to be positive in line with the firm up in economic growth. With this, I hand over to Kaushik to walk you through our financial performance.
Thank you, Naren, and good evening to all of you. I would like to share some highlights of our financial performance. The group revenues witnessed a growth of about 2% year-on-year and 8% quarter-on-quarter in the fourth quarter, primarily driven by improved realization across geographies and better volumes in Europe. During the quarter, our consolidated EBITDA grew by 13% quarter-on-quarter to rupees 6,579 crores. The EBITDA margin on a consolidated basis stood at 18%, and on standalone Tata Steel India, the EBITDA margin was 30%. Revenues from Indian operations increased by 4% quarter-on-quarter, with better realizations amid encouraging market conditions. This is despite volume loss due to the unforeseen outage that we reported earlier at our Kalinganagar blast furnace, which has since come back. During the quarter, Tata Steel standalone recorded a total EBITDA of 4,823 crores. The EBITDA per ton increased by 1,838 rupees per ton to about 15,932 rupees per ton. During the quarter, we took an exceptional non-cash charge of about 1,484 crores in the standalone financials on account of net provisions recognized in respect of certain demands and claims from regulatory authorities relating to mining operations. Out of that, 1,249 crores charge is on the account of provision for interest in the case of differential royalty on processed coal, which was reported as a contingent liability in financial year 2016-17. During the quarter, we have completed the entire process for restructuring of the UK pension scheme, with the new British Steel pension scheme having been set up in March 2018. 69% members have transferred to this scheme. The new scheme has an accounting surplus under the IAS 19, which will continue to support the pension scheme, allowing it to run its required low-risk investment strategy. This is an optimal and sustainable outcome for pensioners, current employees, and the UK business. As per IAS 19, the new scheme has a non-cash accounting surplus of £2.2 billion by the end of financial year FY17-18. Out of this, a non-cash gain of £1.64 billion, that is 14,077 crores, has been treated as exceptional gain during the quarter, which is included in our group profit after tax. Other comprehensive income was 4,509 crores during the quarter, mainly comprising non-cash remeasurement gains on actuarial valuations of employee benefits amounting to 4,532 crores. Gross debt during the quarter increased by about 3,500 crores, mainly due to the foreign exchange translation impact and the consolidation of our newly acquired subsidiary, the Bhubaneswar Power Private Limited. Net debt stood at about 69,215 crores. The liquidity position of the group remains strong with 36,320 crores, comprising of 22,932 crores in cash and cash equivalent, and about 13,300 crores in undrawn lines. Against the capex guidance for financial year 17-18, we have incurred capex of about 7,400 crores. During the quarter, the company completed two large financing transactions, which gives us significant flexibility to pursue our growth plans. We completed $1.3 billion international bond issue in January, which helped us to extend the maturity profile, followed by a 12,693 crores rights issue, which will help us in strengthening the balance sheet. The issue opened for subscription in February 2018 and closed in March, and I'm happy to report the response was overwhelming. Quickly, to comment on the Bhushan acquisition, so fundamentally we believe that the turnaround plan to take the capacity utilization to 100% will be within the next couple of years, which will also help us to ramp up the cash flows. We see significant scope for additional synergies by improving the operating KPIs as well in the commercial space. In addition, we expect a lot of system synergies on procurement as well as on marketing and network synergies. Moving on to the transaction structure for the acquisition, we will be paying a total consideration of 35,200 crores upfront to the lenders. This will give us about 72.65% equity stake in the company and close to 100% economic interest in the company based on the transaction structure that we have formulated for the acquisitions. From a financing perspective, the transaction is financed largely by the capital that we have or cash that we have in Tata Steel and an incremental debt of only 16,500 crores, which will be raised on Bhushan's balance sheet. This debt will be included in due course in the Tata Steel consolidated numbers. On a valuation part, we believe that this is a value accretive acquisition for Tata Steel. If you look at it from a replacement cost basis, a greenfield project of 5 million ton hot roll coil and 2 million ton cold rolling mill capacity will require about 31,000 crores, assuming about 5,100 crores per million tons of HR capacity. This does not take into account the other downstream facilities that the company has. Assuming a 4-year gestation period and NPV of 4-year potential cash flow is another 13 to 15,000 crores, works out to be about 45,000 crores, and therefore this compares favorably in the context of our bidding value. So with that, I would hand over to Samita for coordinating the questions and answers.
Yeah, thank you, Kaushik. So we are ready to open the floor for questions. Over to you, Abhishek.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Dhaval Doshi from Phillip Capital. Please go ahead.
Hello, sir. So just a couple of questions. So first question on the net debt. So the 69,000 crores of net debt which is being reported, I believe that already includes the rights issue money that we would have received in the quarter, right?
That's correct.
So, sir, if you can just help me reconcile, we've got close to 9,000 crores of cash coming in from the rights issue, and net debt was close to 75,000 crores at the end of December. So if I were to adjust for this rights issue amount, our net debt has actually increased?
So if I look at the net debt of 75,900 crores that you mentioned, then we had an increase on account of forex translation of 2,000 crores. The impact on the Bhubaneswar power that I talked about consolidation is about another 700 odd crores, and there were other smaller increases on the consolidated basis. So total was about 3,546 crores. So that's the net debt number. But if you take into account 9,000 crores of rights issue, the operating cash flow before working capital changes of about 5,300 crores. We had also changes in working capital of about 850 crores. If you take the capex spend, I'm giving you almost a cash flow statement, 2,100 crores, an interest paid of 1,900 crores. Then it would come down to about 79,000 goes down to about 69,000 crores.
Okay. So secondly, the question on the European business. So if I were to look at the third quarter and adjust for that maintenance shutdown impact, our EBITDA per ton was close to $70. From Q3 to Q4, hello?
Yeah, go on.
Yeah, from Q3 to Q4, there has been an improvement for a good amount of our competitors in terms of profitability. Whereas if I were to look at our financials, we have flat quarter on quarter, adjusting to that shutdown impact in Q3. What are the factors which has led to a flat movement in profitability compared to a jump for the competition?
Firstly, even in Q4, we had some challenges. Q3, we had some plant shutdown. Q4, we had some operational difficulties, particularly. So to that extent, while it was a bit...
I'm sorry, sir. There was a blank. I couldn't hear you properly.
Yeah. So what I was saying is, while Q4 was a better quarter than Q3, but we did have our own set of challenges in Q4, particularly in the UK in February and to some extent in Netherlands as well. So as a consequence, since some of the problems were in the hot strip mill, we had more slabs to sell, which brought down the average realizations. So that's why you're not seeing the margin similar to what some of our competition has shown. But things have since improved, and we hope that this quarter will be better than Q4 as well.
Okay, so it was a one-off incident which had happened in February, you mentioned.
Yeah.
And roughly, if you can quantify, sir, what could be the impact on account of that?
No, I guess it is, these are more like operational issues that happened in the Tata Steel Europe largely. And, of course, the Kalinganagar issue where we lost about 250,000 tons. So those are, and if you look at 250,000 tons into 15,000 plus EBITDA per ton, you would get at least some sense on the India side. And, of course, in European side, it was more like operating issues, which hopefully in the next quarter we should be over.
Okay. Sir, a question on the India realizations. Sir, what would be our Q4 exit compared to Q4 average, and how would that compare to the current realizations?
Q4 exit compared to Q4 average, is it?
Yeah.
I think Q4 exit would be about a couple of thousand higher than the Q4 average.
And how about the current realizations with Q4 exit?
A couple of thousand higher.
Okay. Thanks, sir. I have more questions. I'll come back in the queue.
Yeah.
Thank you. The next question is from the line of Rajesh Lachani from HSBC. Please go ahead.
Yeah, thanks for the opportunity. So my question is largely related to the Bhushan acquisition. So just want to understand what are the plans for the captive iron ore usage in Bhushan? And another question is on if you can quantify the synergies that can arise from this acquisition, and also what is the EBITDA per ton now, and what are our expectation when it reaches to 100%?
So Rajesh, we've not even entered the gate. So I think the issue is, we have a certain assumption on which we have valued and put in our bid based on the NCLT approval of the resolution plan. We are hoping to close it quickly, though we know that there are some hurdles and obstacles being put in. But effectively, I think the specifics of the number would be better had once we get in, because that would give us a ground feel properly, and then we can do that.
Sir, but on captive iron ore, any plans on that?
Yeah, so on captive iron ore, you see, we have to follow the regulatory regime that is applicable. Within the company, it is easy, but when you have a separate entity, we have to follow the MMDR rules. So we will look at it from a longer-term perspective and then bring in the synergies. But there are other synergies in procurement, for example, in coal, where it will be forming part of our overall basket. For there, the procurement synergies will certainly flow in.
I think if I can add to what Kaushik said, a few things. One is, as Kaushik said, on the procurement side, we see synergies. Two is on the operation side, we can debottleneck and grow the volume to its rated capacity. Three is, if you look at the EBITDAs of non-integrated players, efficiently run plants today in India are in the range of 10,000 and more rupees per ton of EBITDA. So that's a good number to certainly chase to start with. The iron ore supply will depend on regulatory approvals that we need to get. We also have a possibility, once we complete the Kalinganagar expansion, to use the extra slabs that we have in Kalinganagar to roll in the hot strip mill in Bhushan, which has a capacity in excess of the steel making capability. So these are the top-level kind of thoughts that we have. But as we go in, as Kaushik said, and spend some time in the plant, I'm sure we will find more ways to unlock value.
Sure, sir. Yep. Thanks. That's all from my side.
Thank you. The next question is from the line of Sanjay Jain from Motilal Oswal Securities. Please go ahead.
Hi. My question is on Bhushan Steel. Firstly, Bhushan Steel had bagged an iron ore mine in Odisha. So does that come along with these transactions, or that is not part of this transaction? That's first part of the question. Second part is, you mentioned in your remarks that we are close to acquiring some 70 to 73%, but economic interest which will be close to 100%. So can you explain this thing?
Yeah. So the first one on the iron ore, we had put it as part of the relief and concessions that we should be able to get it transferred. I think NCLT's basically said go to individual statutory bodies and get it transferred. So we will follow it. From the outside, we know that the bid was quite significantly higher. So whether it makes economic sense or not is some assessment we will do before we proceed on that. On the 72% and 100%, well, the equity interest through new issue of equity will be about 72.65%. But the fact is that some amount of, the loan of 56,000 crores sits on the Bhushan balance sheet. And when we are putting in the capital, part of it is going as equity and part of it will go as debt. So effectively, if you look at it, the Tata Steel will also be a debtor to this entity. And therefore, when I said 100% economic interest or close to 100% economic interest, it's through debt and equity together.
It's not clear, actually. When you, let's assume, what will be how will the Bhushan Steel's balance sheet look like post this transaction?
Yeah, so that's why I said Bhushan Steel will continue to have this 56,000 crores. We have mentioned that there is a step-down subsidiary, Bamnipal Steel Company, which is our 100% company, which will be actually the entity which will buy the unsustainable part of the debt. But Bhushan Steel debt, which it used to owe to the lenders, of which the debt which will continue going forward, pure from external, is about 16,500 crores. And the balance capital, which is 35, will be between Bamnipal Steel Company and this entity on a intercompany loan basis. So that's how the structure will be. And Bamnipal will be capitalized by Tata Steel through the 18,000 crores odd that we are talking about.
Right. The press release also talks about 9,000 crore as an inter-corporate deposit which can get converted into equity. So what is the terms of conversion into equity, if at all there are any terms?
No, that terms is something that we would develop. It is already in place, but we think we will get a better disclosure when we will look through the ICD route, and we will ensure that it has to follow the SEBI norms because it's a listed company anyways.
I see. So just one last thing on this. When do we pay this 35,200 crore? Does this money move out now, or there are certain steps after only that? Is it conditional upon 9,000 crore getting converted into equity, or is it before that?
It is all at once. So when the equity flows, so it is a day one condition. So when we actually put this money in the sight of the lenders, they issue shares from the company. They will enforce the pledge of their holding or their pledge on the current promoter shares. and that's how the transaction will be completed as per the resolution plan that we have submitted. So it's a K1 issue.
Thanks so much.
Thank you.
Thank you. The next question is from the line of Pinakin Parekh from JP Morgan. Please go ahead.
Yeah, thank you very much. So my first question on Bhushan Steel is why stop at a 72% equity ownership and why not at 100%? Because if the asset is going to generate strong cash flows going forward in the future, would it not be problematic at a later date to increase the stake?
So, Pinakin, you know that listed companies have a minimum shareholding of public float of about 25%. The delisting rule, if we go beyond that, we have to come back to 75 within, I think, 1 year at this point of time. The SEBI is considering possibly some change in the limit for the IBC route. So that's the primary reason. And the option, therefore, is limited because the delisting process is not very efficient, as you are aware, in India. So I think it's a long drawn process. So I think we are maximizing our holding in the context of the IBC process. And there are other tax implications also. So from a tax efficiency point of view, holding perspective, listed company obligations, etc. That's why we are looking at this number. It's actually been well worked out based considering all issues into account. And then we have to see as to what does the end state structure look like at a due point in time.
Sure. So on day one, we'll start with a 35,200 crore check to the bankers. From day one to the next 2 years when you said it will take to ramp up utilizations, what will be the additional investments required by Tata to be made into Bhushan to ramp up the operations or to reduce the cost structure?
So I think, unlike other targets that we looked at, Bhushan is perhaps the one which is complete in its configuration and complete in it's like good to go from day one. So the other assets that we looked at always had, all of them had some part of capex to complete or some part of capex to debottleneck and so on. So I think here, while I don't want to give a number at this point of time, but I think you can assume that it is more sustenance capex and a little bit on the debottlenecking and environment safety, those kind of, it's like bringing up to a standards which we in Tata Steel operate. But it is not that some part of the plant is not in complete shape or we will have to complete it and so on. So I think that's the greatest advantage in Bhushan that we saw, that it is it's a complete plant, operating plant, and therefore the incremental capex which is necessary to ramp up is not very significant. We in Tata Steel always have improvement capex which has high ROI and short payback period, which is something we will take into account because we would certainly want to ramp up fast.
Sure. And my second question, the next question is that there has been a lot of reports about this 5.6 million tons, ability to go to 8 million tons very quickly. Do you think that's possible? Can that be done at a limited capex, or that will require a full-fledged capex plan?
So taking it from 5 to 8 will require new facilities. It will need a new blast furnace and a steel making facility supplementing the existing one or adding a vessel or something like that, and a hot strip mill or a rolling capacity. So it is like a full-fledged brownfield expansion. 5 is the current level at which I think one can take it to through debottlenecking and various marginal investments. Beyond 5 will call for a, more significant investment.
Sure. And so given where Bhushan is located, given its product mix, in the next 2 years, if steel markets and the cost structures were to remain where it is, do you think Bhushan can attain a profitability close to where Tata Steel is today? I mean, obviously, iron ore is a distinct cost differential, but ex-iron ore, can it ramp up over there?
Yes. So there are a few ways to look at it. One is, the Bhushan facility, including the blast furnace, is very similar to the one that Tata Steel has in Jamshedpur. So we're very familiar with the facilities. The hot strip mill is a good hot strip mill. The steel melt shop is also a good shop. So I think overall, as Kaushik said, the facilities are good, and that's what attracted us to Bhushan the most. So firstly, we believe we can run it at the efficiencies at which we run the Jamshedpur plant pretty fast, and that is something which gives us comfort. The second part is they are very significantly invested in downstream, whether it is cold rolling or galvanizing or color-coated or pipes. So they have a very significant downstream value add, and which again supplements what we have, and that also helps us, in many ways in the marketplace. So the ambition, yes, is to take it to the levels that Tata Steel is already operating at, and I hope the iron ore advantage that Tata Steel has can be offset by the downstream facilities that Bhushan has in some sense.
Understood. And so my last question is what many investors are concerned about is now that Bhushan Steel is in the bag, what is the company's view on Bhushan Power and Steel? Because obviously there's a lot of noise. The company is a bidder, but Liberty House is also there. Would Tata Steel like to have both the assets on its books right now? I mean, it comes with its balance sheet and operational issues. Or is it okay, comfortable, ramping up Kalinganagar Phase 2 and ramping up Bhushan Steel?
So it's like this. Obviously, ramping up Kalinganagar, ramping up Bhushan Steel puts us in a very good position. Bhushan Steel basically takes care of our volume needs for the next 3-4 years till Kalinganagar comes in. In that sense of the term, that's how it fits in. Bhushan Power, we are still at an early stage. We have not yet reached a stage where the COC has told us anything. As a matter of principle, we believe that, there was a process. We participated in the process, and if we find that the process is getting diluted or compromised, on a matter of principle, we certainly need to fight for it. So that's the view we've taken so far. We'll see how it progresses and take a call at the appropriate time.
Understood, sir. Thank you very much.
Thank you. The next question is from the line of Abhishek Poddar from Kotak Securities Limited. Please go ahead.
Thank you, sir. So a few questions on Bhushan Steel. Will there be any working capital requirement for which we'll have to borrow more from the bank at Bhushan?
Yes, we would look at the assessment to undertake how much of additional lines we require. Typically, these kind of assets would be given the volume, the downstream mix, and the spread of locations. It might add a few thousand more from a working capital line perspective. But as you know, Tata Steel's own working capital management has been very tight and efficient. For example, we have debtors which is more around 8 to 10 days. So we will replicate some of the good practices and the basis on which Tata Steel operates. Also the network synergies and the marketing connects, customer affiliations and relationships will help us in leveraging the working capital management of Bhushan, both from both supply side and procurement side, as I mentioned earlier, and also on the selling side, and certainly also on the logistics issues. So I think we'll certainly provide for working capital line because we want to ensure that the working capital cycle is efficient, but we will certainly look at improving the commercial efficiency and the working capital process in Bhushan.
Yeah. So second question is on the carry forward tax losses. What would be the amount in Bhushan, and when do we expect to realize that?
So I think there are obviously carry forward losses. I think we will have to do a detailed diligence when we get in. Some of it is something which we need to assess because it has to be in the form of carry forward depreciation and carry forward tax losses. So we'll do that. But I think it is not for Tata Steel to get the benefit, but because Bhushan for now at least is a separate entity, so it has to generate its taxable profits, and then the offset will happen. So these details is best understood when we get in fully. We do have some numbers, but I'm not sure that if I put these numbers out, what is inside, because the level of diligence has been fairly restricted in some ways. And once we get in, we do the opening balance sheet, we do the audit for the past year, we would get more insight, and then we can talk about it perhaps in the next call, by which time, if everything goes well and if we can close, then we'll have time to discuss this in details.
Okay. So just one more. If you look at the other EBITDA, which is standalone minus Europe and Southeast Asia for the full year, there is about 1,800 crores of EBITDA which we have earned this year. Could you give us a broad breakup which are the major entities where we have earned this?
You're talking about the Indian company in the others?
Others, yeah. So if we take out standalone minus Europe and Southeast Asia, there is about 2,000 crores of EBITDA that we have earned in FY18, which was a very low number in 17. So,
yeah.
Yeah.
Just one second, I'll just give it to you. So we'll come back to you on the full year. You're looking at full year numbers, right?
Yeah, full year, sir.
Yeah, so the full year is about 2,400 crores. And I'll give you the numbers in a bit.
Sure. Thanks a lot, sir. Thank you.
Thank you. The next question is from the line of Sanjay Parekh from Reliance Mutual Fund. Please go ahead.
Yeah, thank you. Congratulations on a great set of numbers. I just question is on the stretching the balance sheet and increasing the financial risk. See, we moved from chorus, reduced the financial risk, and it was then we of course took Bhushan Steel. But doing Bhushan Power also, does it not increase the financial risk significantly in case the cycle turns bad? So I just wanted what would be the management's view on this?
So, see, if you look at our journey, as you rightly mentioned, we have been in the path of restructuring, portfolio shedding, and trying to deleverage while trying to grow. So we've also grown Jamshedpur from 4 million tons to 10 million tons, and we've implemented Kalinganagar to 3 million tons. And strategically, it's been the right decision because we are now seeing an opportunity to do a further expansion to 8 million tons in Kalinganagar. So we would be an 18 million tons in, say, about 3-4 years. Bhushan Steel, for the reasons that Naren just highlighted, actually creates a very strong portfolio for the market, as well as being a new and a efficient plant. We should be able to leverage it further and hopefully look at the magic number of 10,000 rupees per ton of EBITDA on a sustained basis, given the fact it has a very significant value-added product portfolio. Hence, the amplitude of its earnings should not move like a commodity player, which will help us during should any downturn or reversal in the market or softening happens. So from a financial point of view, I think it is important to look at it in a blended manner based on the asset portfolio and the financial capital structure that we have. Obviously, with the proposed joint venture, we would be in Europe. We would be looking to deconsolidate about 20,000 crores roughly, plus minus, from the balance sheet and add about 16,000 crores on account of Bhushan. Obviously, given the mix of assets, if you look at it, what will go out will certainly be much lower than the 10,000 rupees per ton EBITDA, and what is getting added as a potential to become a 10,000 rupees per ton EBITDA. So I think there is a mix change, if you will, on a smaller asset base, 5 million tons versus what will go out is effectively 10 million tons. On the other hand, we are going to also look at better earnings from the joint venture, given the fact it is a combination of two of the best plants in Western Europe, between Imhouden in the Netherlands and Duisburg in Germany. So we obviously expect very significant synergies in that market. And if I add a pro forma basis, it's already 1.5 billion euros, thereabouts, of EBITDA. Add synergies to it, it has the potential to go even higher. So as a party which has got 50% interest, we'll certainly hope to get better earnings in Tata Steel with the lower EBITDA. So I think Kalinganagar Phase 2 will certainly, Kalinganagar Phase 1 has already been setting one of the benchmarks as far as cost is concerned. We expect to leverage it further in the Phase 2, which will also have a cold rolling mill. So with Jamshedpur, Kalinganagar 8 million tons, Bhushan 5 million tons, and a meaningful interest in the TK in Europe, I think the earnings profile of Tata Steel will certainly look to be very, very strong. On the balance sheet side, and that gives us an opportunity to actually also reset the balance sheet, which is why a 12,000 crores plus rights issue was the right thing to do, because the equitization helps the balance sheet to be stronger and enables us to then do the acquisition. I think we will certainly pursue to bring down our net debt to EBITDA below 3. We will certainly pursue to get the consolidated debt to equity at around 1.2. And I think these are the long-term targets that we have. We do have. Bhushan Power and Steel is obviously in the courts. As Naren mentioned, it's a question of principle at this point of time. And then we will see how it evolves and what else we need to look at strategically. Should we get the same or should we be called to same? There is still a decision point left, not in our hands. But certainly it's not to compromise the financial capital structure or stretch it to a level where it has any pain, even in a downturn, because our scenario is if we have three good assets, Jamshedpur, Kalinganagar, and Bhushan Steel, and if we have a strong downstream and customer linkages and value-added product mix as we do, I think we will be strong financially to defend the capital structure. Sorry for the long answer, but I thought it needs some explanation.
No, it was very, very helpful. It's just that only stretching a bit that, everything absolutely was going well planned, except Bhushan Power, where it looks to be a little stretched. That's the only thought we have.
No, I agree with you. And I think we look at, as I mentioned, my basis of valuation from a greenfield perspective, we have the Bhushan Steel is clearly something that we are very confident from a valuation perspective of a time value of money, as well as building up a similar configuration of such downstream. Bhushan Power has its own advantages, optionalities to grow, etc. But I wouldn't comment on it beyond this. I'll ask, request Naren if he has any comments to add.
While we will wait to see what happens in Bhushan Power, but one thing which Bhushan Power brings to the table, which we are short of, is long products. And I think that's something in our portfolio which we are short of. And the long products demand in India is also growing quite well. And Bhushan Power has a mix of both the commercial grade long products as well as the specialty which is required for the automotive. But we'll take that call when we reach there.
Thank you very much and best wishes.
Thank you.
Thank you. The next question is from the line of Sudhir Kedia from Mirae Asset Management. Please go ahead.
Good evening, sir, and thank you for taking my question. My question is related with Bhushan Steel. Could you clarify, sir, on the shareholding pattern of Bhushan Steel? because as per press release issued by Tata Steel, the lenders will held about 6.6% share in Bhushan Steel, whereas the press release issued by Bhushan Steel, the lenders will held 12.2% stake. Could you please clarify on this?
So I think what you have seen from Bhushan Steel is also correct. What you've seen from us is also correct. We will convert, we will be looking to subscribe to new equity, which will take us to 72.65. And there is a pledged shares of Bhushan promoters which are there with the lenders, which they would hold. And there is, so their total lenders holding will be 12.2%.
So the total issued capital of Bhushan Steel will be about 109 crores?
So no, I think it's 159 crores for our 72.65%.
Whatever that equal to 100% is, that comes to about 109 crores here. That calculation is right?
Where did you get that 109?
158 crore capital you will be infusing
2 rupees.
At 2 rupees, right?
Yes.
And that is equal to 72 point some percentage.
Okay, you're grossing up.
Equivalent 100% I am just trying.
Okay. Yeah, you're grossing it up. Okay, fine.
That is the right calculation, right?
Yeah. So,
sir, you also mentioned that Bhushan Steel will continue to have 56,000 crore debt. I did not understand that. Could you please clarify?
So Bhushan Steel today has 56,000 crores debt on its books.
That's right.
So that 56,000 crores is owed to the lenders, right?
Yeah.
So of which we have bid for 35,200 crores of debt, which we will pay to the lenders.
Mm-hmm.
So there is a balance amount of debt, 20-odd thousand crores, which will continue to be on the books of Bhushan Steel. That debt will be sold by the lenders to Tata Steel for about 100 crores. And, sorry, not to Tata Steel, with our intermediate company, Bhamnipal Steel Company, which will buy it for 100 crores and will still have that, it will still have that claim of 20,000 crores, because unless you do a scheme or a merger, that claim cannot get offset. It will be in the, when the fair valuation happens, we will have to figure out how it can get trued down. But effectively that in the books of Bhushan Steel, that 50,000 will continue.
Okay. So, but you don't have to pay any interest on that 20,000 crores.
There will be accrual, but there will not be a payment requirement. The external debt of Bhushan Steel will be 16,500 crores. There will be an ICD from Bhamnipal Steel Company, which will be about 18,700 crores. And the balance is the unsustainable debt of 21,000 crores, which will be bought from the lenders at 100 crores.
And eventually this intermediate subsidiary will get merged with Bhushan Steel for that 21,000 crore to get written off permanently?
So it can get merged with either up or down. So we have to see eventually what happens.
Whichever way, both the companies will get merged, right?
Yeah, so if you look at it from a consolidated Tata Steel point of view, from intercompany will get knocked off. That external 21,000 crores will get knocked off. Standalone Bhushan Steel will still continue to have that 56,000 till we take the structural changes.
So, sir, in that arrangement, the economic interest of Tata Steel in Bhushan Steel will remain at 72 point some percentage.
So that ICD is there, 19,700 crores.
Okay, that will get converted into equity at some stage.
May or may not. Yeah.
I think what would happen is the cash flows which will be generated in Bhushan Steel first go towards servicing this debt which is outstanding in the books of Bhushan Steel. So before, even if you own 72%, your debt, which is, claim on Bhushan Steel, will have to be serviced before the shareholders get any dividend. And that's the reason why we are saying it is 100%.
So I'm just trying to understand, sir. So let's say 5-7 years down the line, when the things improve, does the Tata Steel continue to get the economic interest of 100% or 72%?
So the point that Sandeep just mentioned is that till the time that all the debt of Bhushan Steel, or at least substantial part of the Bhushan Steel debt is repaid, the shareholders of Bhushan Steel, including Tata Steel in that context, would not get any servicing till all this is taken care of, which is why we are saying that while the holding is 72%, effectively the way the
100% of the cash flows belong to Tata Steel.
The structure is there, and the way in which this debt has to be managed, the first priority will be to lenders, whosoever is the lender, whether it's Tata Steel or the external lender.
Okay. And the intention is that this company will remain listed, right?
So let's start first. I think there is a lot of work to first get control of the company, given all the issues that we face, the obstacles people put in. So let's follow the NCLT process and get control. Then we will look at first improving the current operations, and then we will look at how does it look like. There are a lot of opportunities we believe we can bring to this company in terms of its performance, in terms of its growth, and so on. And it will be integral part of the Tata Steel growth strategy. But we'll take step by step and figure out how best to create value in the longer term.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Rakesh Jhunjhunwala from Rare Enterprises. Please go ahead.
Yeah, good evening and congrats on a fine performance.
Thank you.
I have 3-4 questions, sir. First thing is this European transaction now. You say you'll sign the definitive agreements in this quarter, you hope to sign it.
We aim to sign it, yes.
It'll be a 50-50 joint venture.
That's correct.
And our 20,000 crores of debt will be transferred there.
That's also correct.
And whatever debt we have in Europe, because in Singapore, that will remain with us.
That's correct.
But you hope to service that debt from the cash flows of the European joint venture.
We hope to service that between the cash flows of European joint venture, because we talk about the synergies, or supported incrementally from India, either of the two.
Okay. And so what is the volume guidance for this quarter?
We don't normally give a quarter guidance. We said for the year it is 12.5 in India and 12.5, and in Europe it is.
No, but you went about this breakdown. It is repaired in the last quarter itself?
So it will be, we expect Q1 to be better than Q4 last quarter, because last quarter we had a couple of setbacks both in Europe and in India. So certainly Q1 of this year, unlike other years where normally Q1 is worse than Q4, this year Q1 will be better than Q4.
And so your contract prices, I have heard that, I've been told that you are the person who had the largest contracts. So in this quarter, a lot of your contracts have got repriced. And most of them are now matching market.
Contracts as in?
Sir, you have a lag in the decrease and increase in prices, no? Because you have long-term contracts. What is generally the nature of a long-term contract? 3 months, 6 months, 1 year?
So it in India, it varies from 3 months to 6 months for the automotive contracts. And all the others are typically a monthly kind of contract.
Right.
So in Europe, it is more, it even extends to 1 year. Then there are half-yearly and quarterly contracts. So Europe is skewed almost 70% on 3 months and above, and India is about 30% 3 months and above.
So therefore now, in this quarter, which is the first quarter of the current financial year, you would have, most of your contracts would be marked to market in India.
Yes, that's right.
And you have to, because we are in a rising price scenario, so therefore even in Europe, all your contracts, quarter to quarter, you get better prices, the repricing.
So European contracts are typically contracted from January onwards, whereas in India the contracts are April to September and September to March.
Right, so therefore you will have therefore you said that your average realization in the last quarter end was a couple of thousand more than the average of the quarter. Yeah. And now it's a couple of more thousand of the end of the quarter. That means we can expect effectively better prices in this quarter than the previous one.
Well, all I would like to say is this quarter will be at least a couple of thousand better than the average of last quarter. Maybe I didn't articulate that well. Last month of last quarter was maybe a couple of thousand better than the average of that quarter. But this quarter, just now, I would say a couple of thousand. Markets are comfortable just now. But, steel markets are always a bit fickle. So, we'll wait to see. Just now the quarter looks good. That's all I can say.
हम जानते हैं कल का भगवान को मालूम क्या है भाई आज भाव सच्चा है कल का स्टॉक मार्केट किसको मालूम क्या भाव So in a good market, I mean, as your presentation says, your feeling is the steel market is good.
Yeah, I think
it will remain so.
I think globally there is far better balance. For the first time in 3-4 years, all major consuming markets globally are growing in steel. And in India also, the domestic market, the demand is growing quite healthily.
So I think you think we're in the mid-stage or the early stage of the mid-cycle or the up-cycle or...
So if you look at the hot rolled coil prices today, globally also, forget the US where it is more than $900 because of various reasons, but globally it is around $600, which is, if you look at the last 10-year average, it is pretty much the average, in fact, the lower end of the average, because normally the prices have been in the $600 to $650 range, whereas, we are today at $580 to $600. And this looks very high compared to what it was 2 years back because we went down to about $300, $320.
Right.
If I look at the average of the last 10, 12 years, I think 600 is not an abnormal price at all.
And sir, even the rupee depreciation should help you because your main competition is imports.
Yeah, yeah, that's true.
So everything is going well. Vale. Best of luck, sir.
Thank you very much.
Look forward to your support.
Thank you. The next question is from the line of Amit Dixit from Edelweiss. Please go ahead.
Thanks for taking my question and congratulations for a good set of numbers. There are two questions I have. One is that you mentioned that your long-term, net debt and EBITDA and debt to equity targets 3.0 and 1 to 1.2x respectively. However, we are in, midst of a lot of things like, Bhushan Steel and Bhushan Power and Steel. So, what is the, intermittently, what kind of net debt to EBITDA is the absolute max for you? I mean, beyond which you won't go even in intermittent term.
You're talking about absolute levels?
No, net debt to EBITDA, I mean, typically ratios.
Okay, so, if you look at total EBITDA this year, consolidated, is about 22,000 crores. Okay, so if you look at 22,000 crores and the current net debt is about 69,000 crores, we're not too far. But having said that, a lot of the cash that we have will, as I mentioned earlier, will go towards the acquisition of the Bhushan Steel whenever that gets completed. And the other thing will be that from that 6920 will go away when the deconsolidation happens. So if you look at it from a broad perspective, that 69 will become 49 and then it will increase by about 16,500, which is the additional, and some of the 18,000 that we are going to put in. So if you look at, it's roughly about 50 plus, say 34, 84,000 crores and of debt that we would have post only Bhushan Steel. And then we have to look at how we can move the EBITDA with a better mix, because some part of the EBITDA will go away because of the joint venture. There will be additional earnings coming in on a consolidated basis on 50%. For example, when we talk about pre-synergy EBITDA of the JV at about 1.5 billion euros, you can say a billion euros should come in on the EBITDA side, though we will consolidate only the profit line. And then Bhushan Steel, if we ramp up well, we will be able to compensate for the loss of EBITDA in Europe. So I think ballpark in the immediate term it will increase, but we are constantly working on it, both from an earnings side as well as from a portfolio side, to reduce the debt level. 3 is not achievable immediately, but 3 is something that we will aspire for on a stable state basis going forward. Once the ramp up is kind of achieved in 3-4 years time, and when Kalinganagar comes in, we are talking about another 5,000 crores of EBITDA. So, we have now put in elements which will start giving long-term EBITDA, which will then help us to keep the matrices within the acceptable limits that we have aimed for ourselves.
Sure, sir. And next question is on the BSPS one-time gain that we have reported, exceptional gain. Is it non-cash in nature?
Completely, yes.
And is it the same amount that you are starting surplus with?
No. We are starting a surplus with about, similar 1.6, 1.7 billion after the 30% odd people have gone to the pension protection fund. So, similar on the IAS 19 basis. That's the surplus. It's about 120% of overfunding. Our funding position is 120% on overall basis.
Sure, sir. One more question, if I may. I still didn't get the maths of this 35,200. When we are paying upfront, I would think that actually lenders are being crowded out, or, lenders are taking haircuts, so as to say, which is a very fashionable term these days. Lenders are taking a haircut. So 56,000 crores become 35,200. But, hearing the call, I didn't really could plug in the gap. If you can throw some more light just for the sake of repetition.
So the lenders currently own 56,000. They will get paid 35,000 for their 56,000. And within that 35,000, it's a mix between additional debt, or rather the mix is external debt of 16,500 and our capital of about 18,000 crores. So what lenders own today, or rather the Bhushan Steel owes to the lenders of 56, tomorrow they will get settled at 35. That 35 will be funded 18,000 by equity by Tata Steel, equity as in own cash, and the balance amount of 16,500 from external debt.
So if I can clarify, the existing lenders who have 56,000, they will take a haircut and they will step out. The new lenders which Bhushan will have is 16,500 of new debt which we will put on Bhushan. And then the balance amount is what Bhushan will owe Tata Steel or Bamnipal, which is the SPV.
No, fair enough. That part the party understood. So that means, 56,000 crores from Bhushan's book will completely vanish. Is it?
No. One second. So there are two parts to it. One is you're talking about lender's haircut. So as Samita mentioned, I mentioned earlier that 56,000 is getting settled at 35,000. So that's that when the current lenders get paid 35,000, that completes the relationship with the current lenders. And they have settled their dues of 56 at 35. That part is understood?
Yeah, that part is understood.
Yeah, so the haircut part is understood, right? Now, the Bhushan Steel Limited has got 56,000 crores as debt. So this 20,000 crores, which the lenders have settled for 35,000, or rather 56, which they have settled for 35, this 20,000 crores still sits on the books of Bhushan Steel, and this debt will be sold to Tata Steel for 100 crores. So Tata Steel then becomes the lender for Bhushan Steel for 20,000 crores, for which it has paid the lenders 100 crores. So that is the structure. Now, the 35,000 crores, so have you understood this part?
No, I understood that part, yeah.
So the second part is done. The third part is 35,000 crores now has to be funded. So for 35,000 crores, we are taking external debt of 16,500 crores, which is will be on Bhushan Steel, and it will be serviced from the cash flows of Bhushan Steel. And we have put in, through a mix of ICDs and intercompany loans, about 18,000 crores to pay for the balance to make it 35,000 crores.
I think the easiest way to understand is 56,000 crore debt is being bought by Bamnipal for 35,000 crores.
That's you understood that.
That's it.
So you understood the haircut, right?
Yeah, I understood the haircut part. So that means Tata Steel, Bhushan will owe Tata Steel sum of, 20,000 plus whatever you will inject.
20,000 plus 18,000, 38,000.
Yeah, so that they will owe you. And at some point in time, when company is doing well, is there a plan of getting it back from Bhushan? I mean, just thinking.
Yeah, so that's how it is structured, which is why we keep saying economic interest. See, first of all, from a consolidated Tata Steel point of view, this 20,000 will get knocked off as intercompany. The 18,000 will also get knocked off in some way. So the net external debt of 16,500 is the net addition of debt to Tata Steel consolidated. That's how you should look at it. So if I look at it, and if I were to explain, this 5 million ton acquisition of Bhushan Steel will increase the debt of Tata Steel by 16,500 crores roughly.
Great, sir. Got it. Thanks so much for the elaborate explanation. And all the best.
Thank you.
Thank you. The next question is from the line of Bhavin Shera from Enam Holdings. Please go ahead.
Good evening, sir. So, a couple of questions on the European JV. When we sign the agreement, will there be a clause when any one party has to exit, there will be a first hit of refusal?
So as part of our arrangements, we will have a lock-in period, which we will define, which is under debate or rather under finalization. That lock-in period, during that lock-in period, neither party will exit. Post that lock-in period, we have formulated a mechanism where how it will be done. So obviously, like in any standard joint ventures of this nature, there are right of first refusal, what's the mechanism. So we will all put that in the agreements that we are currently under formulation.
Yeah. So my second question is, once the European JV is formed, the Indian standalone operations and Tata Steel, will it continue to have a corporate guarantee and the future debt of 20,000 crores would be non-recourse to our balance sheet?
So as of today also, we don't have it as recourse. We have certain arrangement, but there is no recourse to Tata Steel at 25,000 crores. So going forward also, this will be an independent company supported by its own cash flows. We would only be shareholders with governance rights to manage the company. So there is no question of Tata Steel guarantee or support.
So on the Indian part, the NCLT or other any specific bidding guidelines restrict the compulsory listing of the acquired entity for any number of years?
No.
So there is no restriction of keeping Bhushan Steel listed for a minimum number of years in any of the guidelines under which you have bidded or SEBI law?
No, there is no restriction under IBC, neither there is any restriction. So you have to follow the rules of
the delisting process or merger process, whatever.
Absolutely.
Okay. And my last question, what would be the Indian and the European capex for FY19 and 20?
So, as I mentioned earlier in the call, we spend about 7,400 crores. Next year, we will obviously start spending some part of the KPO expansion, not that it is going to peak up or something. So, it will be about 1,500 crores higher.
So, roughly on a consolidated basis, 9,000 odd crores.
That's correct.
Okay, thank you, sir. Best of you.
Thank you. The next question is from the line of Bhaskar Basu from Jefferies. Please go ahead.
Yeah, thanks. Just a couple of questions. One, just a clarification on this whole structure. You mentioned that the debt will increase by about 16,500 crore. But even that 18,000 crore which you're paying, it essentially goes out as... So in terms of net debt, actually the impact will be higher, isn't it? Because that's a cash outgo.
That's what I mentioned, that if you look at it, the cash that we are sitting in will out to fund that 18,000 crores. So the gap between gross debt and debt will narrow.
Okay. And secondly, Bhushan's release also talks about 1,200 crore of payment to operational creditors. is that on top of this, and how will that be funded?
So we have mentioned in the resolution plan that 1,200 crores, so there is certain amount of claims that has been admitted by the resolution professional. We have mentioned that 1,200 crores of operational creditors will be met over 1 year period from the cash flows of Bhushan. So once we get in, we have to get more details and understand and have conversations with the operating creditors, who owns what's been admitted and so on. So that's why we have asked for a 1 year period to resolve this.
Okay, and just one final question. There is also this issue of power purchase agreement which you had contested, and Bhushan had an issue with it. Without that, is Bhushan Steel self-sufficient in terms of captive power requirement for the Konark and electric arc furnace?
No, just now the requirement of power is about 80 megawatts, and sorry.
No, to run the plant.
To run the plant, yeah. And obviously, there is a PPA with Bhushan Energy, which is what is being discussed. But otherwise, obviously, one will have to look at other options to get this amount of power from the grid.
So there's also a talk that Bhushan Energy is admitted to NCLT. So we'll see as to how that goes.
But just to be clear, Bhushan Steel depends on Bhushan Energy for its power requirement, or it has its own captive plant?
No, you can always buy from the grid.
Right, but that would be obviously higher cost, isn't it?
I mean, that also we need to compare with the PPA.
So the PPA economics versus the grid economics is what we need to compare and assess. And obviously the flexibility for a grid economics will increase if that cost is price is lower landed at Bhushan. And we will have to look at we had actually asked for the amendment and termination and amendment of the PPA in the resolution plan, which we have to pursue. And as I said, that our news is that Bhushan Energy is also in the NCLT, so we have to see as to how that perfect will work.
Just to add to what Kaushik said,
right.
Bhushan Energy also consumes the gases from Bhushan Steel.
Okay.
So there is a link. So, you have the supply side control.
Right. Got it. Just one housekeeping question. In terms of coking coal cost, what was it this quarter, and how does that move next quarter?
So there are... Yeah. So coking coal prices actually, from a purchase price point of view, it has dropped, but from a consumption price point of view, it has gone up. If I look at Q4, the consumption cost is around $152, and Q1 it will be about $176 because we will be using most of the expensive coke that we bought earlier.
Okay. This is for India?
This is for Europe.
Okay.
And for India, the consumption cost for coking coal for Q4 was $157, and in Q1 will be about $175.
Thank you. That's all from my side.
Thank you. The next question is from the line of Sumangal Nevatia from Macquarie. Please go ahead.
Yeah, thanks for the chance. A couple of quick questions. One, you said volume growth guidance of around 12.5 million ton next year. Just want to know, when do we expect that 1.5 million tons debottleneck capacity at Jamshedpur to start contributing?
So Jamshedpur was supposed to be 1 million tons of debottlenecking from 10 to 11. So, that's more through, with very little capex, it's more through operational improvements. So we were a bit short of 10 million tons this year. We expect to add at least another couple of 200,000 tons next year, or this year, rather.
Okay, and then FY20 could be closer to...
another 200,000, yeah. So it's because, like I said, it's not through any capex. It is purely through operational debottlenecking. So it's not a significant jump every year. I think 200 to 300,000 a year is a good way to debottleneck.
Understood. Next, there was a press release with respect to monetization of certain downstream assets in Europe. So were these assets part of JV or outside? And if you could just share some details as to what potential monetization can we get from here?
So I think, Sumangal, as you would know that over the past few years, we've been kind of undertaking periodic portfolio reviews and looking at assets. We've done it for longs, Hartlepool, specialty, etc. So we recently did an assessment of the Tata Steel Europe portfolio and arrived at a conclusion that there are certain businesses which are a bit non-core for us. We don't think that we can add significant value to those businesses, and yet we need to ensure that they are under a good parent. So these are smaller businesses like Calzip is one of the businesses, which is the downstream aluminium fabrication and value addition. We've got a small tin plate entity, which is a JV. We have Cogent, which is an electrical business. So we've done that assessment. Entities which are somewhat either independent of the supply chain in Europe, or they are non-strategic or non-core, or we think that we cannot grow those businesses or make them more viable than what we have done so far. We have basically listed them out and taking actions to divest them, and that's the announcement that we had done a few days back.
Understood. Just one small clarification, Kaushik. We understood this difference between equity and economic interest. Now, just want to know, is there any existing instrument in the transaction which will allow us to increase our equity interest also from 73% to a higher percentage in future?
See, the answer to that is twofold. One is the fact that if it is remaining as a listed entity, you will have to default come back to 75. That's SEBI's rule. If you move to delisting, and which has been a very tough journey for most companies in India, then you can have it at 100%, and then you can use these loans that you have to convert, or you circulate it through a preferential allotment and so on, or if it is listed, you can buy it from the market. So all of that is possible, but I think the key point is 75% as of today is the max that you can go in, because you have to maintain a 25% float. If you look at structurally, whether you can merge it, make it into 100% unlisted, etc., that's a journey to be kind of a path that needs to be developed in the future. Hopefully not too far.
Understood. Very, very clear. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Ashish Jain from Morgan Stanley. Please go ahead.
Hi, sir. So just again, sticking on to Bhushan Steel, just on this 18,000 crores that we will be infusing in Bhushan Steel as debt, that debt, will Bhushan be paying interest on that?
Yeah, that 18% will accrue interest, and 18,000 will accrue interest, and Bhushan's will be required to pay interest on that.
So I think finally there will be some structuring, which will be done to ensure that there is minimum tax leakage. So we will announce as we. Initially, yes, there will be an ICD which will go from Omnipal into Bhushan Steel.
Okay, and sir, the press release also says that ICD will have 9,000 crores convertible into equity shares of Bhushan Steel. So that's the right that BNPL will have to eventually convert or not convert into equity.
Absolutely, that's correct.
Okay, so do we theoretically have an option that we convert this into equity, raise our stake to, let's say, 95-97%, and then merge with Tata Steel? Is that something which is legally and theoretically possible?
So when we convert, if we go to 75, we cross 75, there are restrictions to undertake corporate actions. So we will have to tread this path as we move forward. I wouldn't want to, as I said earlier, that not having gone through the gates of this company, I don't want to talk about things which are far ahead. But we have kept the optionality. Should the law change, should anything else happen, we will see as to how we can work this out. Obviously, I think your alignment is same as ours, that we would like to ensure that we have the maximum amount of flexibility.
No, Kaushik, sorry, I just want to understand, like, let's say theoretically if we convert and raise it to 95, 9 and whatever, then to avoid delisting or going back down to 75, does law allow us to merge in that 12-month interim period is what I was asking.
Current law does not, SEBI does not.
Exactly.
Does not require.
Fine. That's what I wanted to ask. Great. Thank you so much.
Thank you. The next question is from the line of Ritesha from Investec. Please go ahead.
So thanks for the opportunity. So my first question is, I'll start from Europe. The sale of non-core assets, what we have given a press release a few days back. All this fall under Tata Steel UK, right? So I was of the understanding that post JV, there's nothing which will be left in Europe. Can you please correct me over here?
No, what you said, it falls under different holdings within the Tata Steel Europe entities. There are different entities which hold. Some of it is in UK, some of it is in Canada, some of it is in other countries. So what was your question?
Sir, I checked on the holding structure. To my understanding, Istanbul, Cogent, Galzep, First Steel all fall under Tata Steel UK and then it comes under Tata Steel Europe.
Yes.
So my question is, as part of the JV structure, Tata Steel UK, it was like 67 and 33%.
Yes.
So wouldn't this be under the JV structure itself?
No. So Tata Steel UK will be part of the JV. 67%, which is held currently by Tata Steel through Tata Steel Europe, will be held by the joint venture company.
Okay, so these are assets which are currently under the JV, which you are disposing of after having consulted with Tyson and BSPS?
No. It is not nothing to do with TK. As I said earlier in the question, that we undertake a periodic portfolio review, based on which we have taken this call to sell these assets because these are either non-core or independent of the supply chain in Tata Steel Europe.
Okay. So, sir, are there any further more assets, something like this, which you consider non-core outside the JV?
No, there's nothing. As far as Europe is concerned, I don't think there is anything else.
Okay, that helps. So, secondly, on the balance sheet, hypothetically, if Bhushan Power had to come, will we consider our decision on KPO2, specifically 2.2 million ton CR mill? So, I appreciate the commentary which you gave on how to look at the balance sheet going forward, but is it something that you would consider delaying KPO2, certain part of the expansion that we have highlighted?
So, Kalinganagar phase 2 actually takes us to a very different cost structure because we've already incurred the cost for an 8 million ton facility and we are operating at 3 million because that's the only facility we put up. So from a value creation point of view, the Kalinganagar expansion from 3 to 8 is very beneficial to Tata Steel. That is one. Second point is, it is going to happen in 3 to 4 years and most of the money is required after 2 to 3 years. So it's not something that we require just now. Third point I want to make is a cold rolling mill there is a state-of-the-art cold rolling mill, which will be a much better cold rolling mill than the facilities that we have in Bhushan, which is suitable for a certain type of mix and for certain grades. But this is a continuous annealing line which is being put up and a very high-end, not only cold rolling mill, but a high-end galvanizing line also. So that is something we would anyway require to cater to the growing needs of galvanized steel in the auto sector in India. So as of now, there is no thought on, postponing Kalinganagar.
That helps. So specifically on the Bhushan Steel part, you indicated that they have a 2 million ton CR mill. My understanding was it was 1.2 million tons. So if you can help us with the configuration of the asset, it will be quite useful.
Yeah. So can we...
And my second question over here is do we have land in place to expand from 5.6 to 8 million tons?
Yeah. So let me answer your first question. So basically, if you look at the total capacity in Bhushan Steel, it's about 5 million tons, which has 1.98 million tons of cold rolling capacity, which includes 0.95 of pure cold rolled annealed material and another 0.95 is galvanized, color coated, etc. So that's how the almost 2 million tons. So they may not be selling 2 million tons of cold rolled, but they have cold rolling facilities, some of which is further value added as color coated and galvanized, and they also export a lot. That's why some of it is not visible in the domestic market. And your second question, yes, there is enough land there to expand from 5 million to 8 million.
That helps. Sir, coming to Bhushan, this 35,200 crores, it includes 9,000 crores, wherein, to my understanding, it's the financial creditors who have the optionality to convert it to equity. Sir, if you could please provide some color over here, it will be quite useful.
So that financial creditor is Tata Steel.
Okay. And, sir, secondly, you said on this 18,700 crores, it could get converted to equity at some stage. How should we read into this?
So that 9,000 is inside that 18,000.
Okay. And, sir, the timelines over here?
At our choice.
Okay. And it would be at what price? How would it happen?
Following the SEBI guidelines on the conversion.
Sir, can you please provide some color? I'm not aware of it.
No, the SEBI has a guideline of how many days average price, 6 months, 3 below.
Okay. Okay. That helps a lot. Sir, last question, if I may. Sir, you indicated the valuation for the asset at 45,000 crores, including 4 years NPV at 15,000 crores. Can you run us past the assumptions over here?
No, I started from simple, the replacement cost. I said 5,100 crores per million ton as the replacement cost. Then we have the cold rolling mill. That is at the 5,100 is normally at the HRC stage. And we are talking about a cold rolling mill. We are talking about downstream assets. So all taken together itself is about 34,000. And then we are talking about, even if you take the target level, Naren talked earlier at about 10,000 rupees per ton of EBITDA. And if you take that, at least 4 years is required to build, provided you have land and approvals, which in India is a far-fetched kind of availability or enabler. Then, if you were to ramp it up and build it in 4 years' time, you would certainly see a NPV of your or PV of your EBITDA is almost about 12,000 crores. So what we said is, if you are building it, it will take you to build about 35,000 crores, including cold rolling mill and including downstream assets. And then if you have 4 years of earnings, which is saved by buying it, it will go towards 45,000. So as against that, when you are paying 35,000, to us at least, it justifies very well.
That helps. Sir, lastly, you said about iron ore synergies, right? MMDR rules being applicable. Is it like currently we can't use iron ore from Tata Steel to Bhushan if it's a different entity? Are we looking at something over here when this could actually become possible and there could be some synergy element?
Yeah, there are some captive rules, guidelines as per the MMDR is concerned. And when a particular resource is meant for captive use, we're not supposed to sell it. And that's what I mentioned, and that's what Naren mentioned. So we have to look at what structure it works, what approvals we need to take. If we own 72% of an entity, obviously it is part of the same family. However, there are regulations that we need to cross to ensure it works. Should it happen that it is an entity within the same Tata Steel, it obviously becomes faster to utilize.
Perfect. Sir, last question.
Ritesh, I'm sorry to interrupt. May I request you to come back in queue for any follow-ups? Thank you. The next question is from the line of Pinakin Parekh from JP Morgan. Please go ahead.
Thank you very much. So our last question was that a lot of things that you mentioned in the call would effectively at a later date fall into related party transactions, whether it's conversion of the ICD into equity or paying down. And Bhushan Steel is still a listed entity. So do we foresee a problem where we have to go back to the shareholders for every transaction which will involve Bhushan Steel and Tata Steel or its intermediary entity?
So normally for related party, even today in Tata Steel, we follow an omnibus rule of approval from shareholders. There is a certain way in which all companies operate, not only Tata Steel, to get that. So we will follow the same process. So it's not that we need to do anything special. The formulation is laid. and most companies or companies which have other related parties follow it, and we'll do the same. So it's not that each transaction has to go to shareholders. We know what are regular repeatable transactions, and we need to know what are the exceptional transactions. We'll define that and take approval accordingly. But everything is complete.
Understood. Thank you very much, sir.
Thank you.
Thank you. We'll take the last question from the line of Abhijit Vara from Sundaram Mutual Fund. Please go ahead.
So thanks for taking my question. I have just one question. After you take over Bhushan Steel through subsidiary, what will be the outstanding share capital, sir? Number of shares in Bhushan Steel?
You're asking a very specific question. Can we take it offline?
Sure, sir. I'll write an email. Thank you.
Thank you very much.
Thank you. Thank you. Due to time constraints, that was the last question. I now hand the conference over to the management for their closing comments.
Thank you very much, everybody, for dialing in. I know it's been very late, but I hope you found this call informative. If you still have any questions after this, happy to answer. Thanks again, and catch up at the next call.